Hello, can you hear me? Yeah, right? I think that they can hear us as well. So it's really low here, right? So thanks so much for being here. It's an honor to chair this session, this afternoon session. My name is Ricard Garriga. I'm from Barcelona, as you can notify thanks to my name. I'm the co-founder of the first startup decelerator. So we have an investment vehicle to invest in people, not in companies. And because the world is changing, we're gonna talk about a lot of things this afternoon. Hope you like it. And let me start to think on what's gonna be your next customers. So the next customers are gonna be millennials. So millennials are people who don't wanna buy houses, who don't wanna buy cars, and who's traveling, who don't like to get married, of course. Because they are global. They hate compromise, but they are using Airbnb to travel, they're using Uber to transportation, but everyone wants to buy a Ferrari in that case. So we are here to talk about transportation, but everyone wants to be, to fit in the transportation, and the people wants to commute and wants to enjoy driving a car. So that's a huge opportunity to be here. That is why I wanna talk about the changing landscape of connected car industry, the real changes of insuring and driverless car. So please join us. We have today Iván Martín, a digital transformation director at Quint, Josep Celaya, CIO of Mapfre, Marco Rodriguez, head of operation and business services at Generali. Thank you. And Esther Sánchez, core IT development at AXA. Thanks so much for being here. The floor is yours. Thank you.
Thank you. Yeah, can you hear me? Yes. Well, thank you. Thank you so much. Well, this is a speech about challenge, as Ricard had said. This is a challenge to be in this new society, in this millennial society. Ricard had said that millennial people maybe don't want to buy a Ferrari. Surely they can't. Okay, so so this is the first topic. No? Well, for me, let me introduce a personal story. I am here 5 years ago around the Mobile World Congress. I worked in the introduction of the contactless technology for payment here in Barcelona city, and for me it's always a pleasure to speak about how technology, how disruption changed the city life, changed the society, changed the companies. Okay. My name is Iván Martín. I am working in Quint, as you can see there. And Quint is a company that is about transformation. It's about help companies, help our customers to deal with the challenges of this technology disruption. On those examples that I told before about how can we manage this new way to pay with the phone, and now how we can act with a society where the mobility is very different. Okay, this kind of congresses, the automobile industry, in my opinion, is one of the most recognizable industries. Okay, you say that it's very important for all of us. Mobility. It was a sign of your life, how type of car you had, and now it's a sign of the millennials, how type of mobility service you use. So this is a thing that is very near to our life, how we understand the life, and this in a sense it describes us. So it's very important how some companies can deal with this new feeling of this new service mobility. With me, the important people here are those guys. They are representative in several insurance companies, And this is the idea that we want to introduce here. This panel is not about an industry companies. It's about how other industries, like the insurance, are affected by a technology disruption that is, in a sense, property of one other industry. No? Cars are changing, so this industry represented here about insuring has to change at the same time that the car industry is changing. So we try to give you, all of us, try to give you a perspective about how these large companies transform themselves to join people, customer, drivers are transforming with the new mobility. Okay, first I asked them to introduce a first opinion or a first view of how are they doing in their companies this management of the disruption, and after this first speech, we introduce some questions about I will introduce some questions about the tendencies and the trends of this smart mobility. After all these speaks, if you want to raise your voice, please use the microphone and ask a question. Okay. Well, so first, I want to introduce Marcos Rodriguez. Marcos Rodriguez is working for Generali. Okay, he comes from the economics formation. You study here in Barcelona? I used to work here. Okay. And he's in charge. He comes from the world of banking. Then he worked for consulting. Now he's in the insurance company, and he is responsible of strategy and operations. Okay. In a sense, Marcos will talk us how he is dealing with the digital disruption in a company like Generali. Marcos?
First of all, thank you for having me here. Can you hear me? Yeah?
Huh?
Yes? Okay. First of all, thanks for inviting me and having me here. And I'm not sure whether I need to answer your question now, or you're going to introduce the rest of the participants here.
Please speak out.
Well, from Generali point of view, I mean, automotive industry is being disrupted, as a number of industry are being disrupted by the digital, what we say, digital or data economy. And in terms of automotive or the auto insurance, we understand that the size of the change is going to be dramatic. Dramatic in the sense that we have carried out a number of studies, and we anticipate that by 2040, the amounts of premiums that will be collected in the auto industry could eventually come down up to 70-80% by 2040. Basically, the size of the premiums will be reduced by a number of causes. You may understand that these new trends in automotion, like self-driving cars, connected cars, and these trends that you're all experimented or seen over the course of the next few years are going to be accelerating, and this would, in our view, would dramatically reduce the risk. Basically, insurance is the basic, the raw material of insurance is actually to insure risk. As long as there's a risk, insurance makes, insurance company makes a living. As long as there's no risk, the size and the significance of the insurance company gets reduced. So what we understand is that by 2040, the amount of risk that will be related to the automotive industry would come down to even, in the most dramatic exercise, down to 80% down from the current levels. That's a significant size. Because of, self-driving cars will dramatically reduce, the accidents. the frequency of the accidents. It could even be discussed the severity of the accidents as well. And therefore, we have to deal with this in a number of ways that perhaps I don't want to use a lot of time, but we can discuss later on. But basically, this is what we are currently seeing, and this is a reality that we need to adapt to by changing our operating model, by changing our strategy, but not only in the vertical of automotion, but also in other areas of the insurance business.
Okay. Well, and next to me here, Josep Celaya. Josep Celaya is the Chief of Innovation at MAPFRE. So you, Josep, are in charge of how MAPFRE innovates their internal processes and even how the business of MAPFRE could follow the innovation and the new business models that the new technologies are giving the company a new sense. So Josep, in a sense, how do you act for the innovation in MAPFRE?
Okay, I think the key challenge for insurance in this moment is how to redefine our role in the new environment. This is the challenge currently. No? Hello? Do you hear me? Yes? I'll try to speak louder. I was saying that I think the challenge for insurance right now is how to redefine the business model and how to fit in the new landscape. And I think the environment in terms of mobility is changing in three main directions. First of all, we have all the technology evolution of the car. I think this is very well known, especially in an automobile fire. So we are talking about connected car, we are talking about ADAS, and virtually in the future, in the near future or in the long run, autonomous car. So this is the first driver of change. Then we have a second one, which is the role of manufacturers. Manufacturers are really getting involved on all the businesses that are done around the car. So some years ago, you find that they were selling the cars and forgetting about their customers. Nowadays, it's about maintaining a sustained relationship on the time with their customers. And third, obviously, we have all the collaborative economies business models. And the challenge for insurers, and I think for any service provider related with mobility, is how to fit in this environment. And what we are doing is try to redefine our products. So those products are relevant for the players in this new environment. We think collaborative economies fleets, we think car owners that are willing to share their cars, and we think that manufacturers are the key players in this environment. So it's about creating products that are relevant for them. It's about trying to adapt to these new business models, and obviously doing it in a, I would say, a humble way. It's very difficult to have a crystal ball in a moment like this. We are really facing times that are, essentially challenging for the change. And that's it.
Okay. Well, and last but not least, Esther. Esther is the engineer of this panel that is about business, but Esther is telecommunication engineer. He works in AXA, and he is the responsible of the IT solution development for all of the branches of the company. In this case, you are the responsible of the IT solutions that you bring to the auto business in AXA. Okay, and in what way do you follow the disruption in AXA?
Okay, so as my colleague said, we are facing a tremendous revolution, a disruption. And how AXA is facing this? AXA is facing this through innovation and with a strategy of test and learning. As we have already said, we cannot see the future. We make our studies. Our business models are going to almost disappear. New business models are coming, but we don't know what's going to happen. So what's doing AXA? AXA is acting at two levels. At a global level, with AXA Group, we are reaching global agreements with new companies, new economic companies, such as BlaBlaCar, based in economy sharing. And because we see here there will be opportunities. What else we are doing? We are opening our systems, or trying to open our systems with significant investments in order to connect to non-traditional partners. So we can benefit of these new business models. What else? We think that having data and working with the data and having a good view on the customer and what the customer needs, how is his behavior, will allow us to make products that are more suitable for this customer and to price correctly these products for this customer. So AXA has invested in a data innovation lab in Paris, which in fact is a bunch of big data experts that we have there with the latest technologies, and that work in this test and learn strategy with AXA countries, AXA entities, in order to test the pilots that we can think that our business people think that could work. And yeah, more or less is this in the global view. Locally in Spain, we have some initiatives, and we have a very interesting initiative that is called AXA Open Insurance, that we are working with insurtech companies, so they can bring to us speed, innovation, that we are, as an established company, as a traditional company, a very regulated industry, with heavy IT systems, with heavy business processes, we cannot reach this speed by ourselves. So we have made this initiative, so both startups and we can benefit.
Well, thank you. Yeah, well, in this initial topic, if I can summarize what you had said, okay, the scenario for an insurance company that is in the car industry, I think that is changing by nature. Marcos has said so. We have to face a world where, luckily, we will have very few accidents in comparison with now. So the nature of the thing that we are insurancing is changing. It's changing the ecosystem. Okay, we have another partners when we have to relate the insurance tech. No, it's the kind of the fintech.
Insurtech, yes, as well as fintech. Insurtech is for insurance.
Okay, and these changes have to need a response, no, from the industry. Well, some of the key that you have said is about openness. So you are speaking that you face the challenge with an open mind. Although the heaviness that is related to the insurance world, heavy regulation, heavy systems, heavy structure, a heavy net deployed in the country, but you need to have an open mind. Okay, you say that you have to be curious about, and Josep has said, you're curious about how the world is changing, how can we use the data that we have in order to predict. We don't have a crystal ball, but we have to predict what happened. And the most important topic that I get from your speech is that the question is to follow closer the customer behavior. So you need to go where your customers are going. No, and this is one of the points that you have said, Esther. In your case, is about the partnership or the relationship with some companies in the collaboration economy that are regarding to the mobility, like BlaBlaCar, like WeCar, etc. So my first question for you is in concrete about this tendency, this trend in the smart mobility, that is the car sharing, the mobility as a service, the collaboration economy applied to the mobility. How your companies are facing this new reality? How are you dealing with this new idea of mobility beyond the property of a car? I don't know. You can go in whatever.
Yes, AXA is reaching global agreements with these types of companies. So still we see traditional products from our side, from the companies, but we are adding guarantees that covers travel more than the property or the damages. So, for example, with BlaBlaCar, a traditional product from us covers car sharing. There's no problem. But what happens when a passenger forgets his luggage in a car which is from BlaBlaCar, another one, or that you are counting on this BlaBlaCar to get you from point A to from point B, and you have some problem in the car? What happens? So we are adding guarantees to the travel, so both the driver and the passenger can benefit from these things. But it's to see what the customers' new needs are, and to open our mind, because our customers are not only the drivers, but perhaps the passengers, perhaps the car manufacturer, perhaps the software of manufacturer of the car.
Mm-hmm. Okay. Marcos, Josep.
Well, the strategy to answer to this new reality from Generali point of view is, the strategy is threefold. Basically, the first one is we'll try to become what we call an ambidextrous company, in the sense that on the one hand, there's still a business in the traditional business, and that business needs to be exploited because it's where we are earning our premiums now and where our profits come from, and we need to excel and have operational excellence and technical excellence in that front. So ambidextrous meaning we have to excel at managing the old business, but also create the capabilities within our company in order to adapt, experiment, and adapt to the new realities that are coming. That we don't know how many years it will take us to get there, but what is for sure is that they are coming. So we need to experiment, we need to be agile, we need to play that game, while at the same time, and that's why we say ambidextrous, at the same time, being excellent in the traditional business. That's the first part of our strategy. The second part of our strategy is what we call the digital play. Digital play meaning the new reality is digital, the new reality is the data economy, and we need to become a data-centric or insight-centric company in that sense, and leverage on data and technology across the whole value chain, from side to side, not only on the auto insurance, but also in the rest of the lines of business. For instance, health insurance, like wearables and these kinds of things, or domotics. So basically, the data economy is transforming insurance across all the lines of business, and we need to invest and we need to excel in this new play, which is the digital bet. So, and the third part of our strategy would be the partnership play, which is basically, as you said, we cannot excel at everything. The new economy is a data economy, it's an open economy. And the new ecosystem needs to be an open ecosystem in which a number of players need to play their part, and we need to orchestrate and take the best out of the potential partners that we are finding along the way. And that from automotion manufacturers, for instance, can be a partner to us, but also technology companies, also telematics providers. So the ecosystem needs to be open, and actually, in order to achieve the level of time to market and return on investment that we need to achieve, we cannot play alone in this game. So this is basically the three lines of strategy that we try to develop in order to respond to the new realities.
To be integrated in the new economy with the collaboration, the cooperation, no? This kind of collaboration competence that we use ourselves. Well, and Mapfre, how Mapfre is facing the challenge of the integration of this new kind of economy?
You were asking about collaborative economy. I think one of the complexities we are facing is that under that headline, there are a lot of business models that are deployed in the world. And even if you look at the most popular companies in the industry, like Uber, for instance, even Uber has like 4 or 5 different business models operating in the world. So if you look at the Uber that is working in the United States, the models they have, Uber Pool, UberX, Uber Pop, are not the same ones that are working in certain countries of Europe. It doesn't work. Again, I think the problem is, can he change this for what? Just a second. Now better? I have to eat it. I'm going to try not to chew it. Okay, the thing is, I was saying that the business models that are under the headline of collaborative economy are very, very different. Unless you understand each one of them and define relevant products for each one of them, it's very difficult to be relevant. I mean, let's face it, and please, the journalists in the room, do not quote me what I'm going to say. But insurance is very boring. Let's face it. It's a really boring product. It's true. It's true. What we have to do is just fulfill do a couple of things very well, because it's what our customers are expecting. We are there just in 2 moments. We are relevant in 2 moments of the life of the customer. The first one is when they pay, which is usually painful, and the second one is when they have trouble, which is painfully as well. And what we have to do is do that as best as we can. And in order to do so, we have to understand the reality of our customers. So in Spain, Uber is about what is called here VTC licenses, which is almost like a cab driver that has a license and operates professionally a car. In other countries, it's about sharing a car that sometimes is used for personal reasons, and other moments is used for professional reasons. We have to understand that and define our products to fit that reality, and that's the key cornerstone of our strategy.
Mm-hmm. Okay. Well, this is one of the, for me, this is the insertion of the mobility in the collaborative economy is maybe the one topic that is already in our lives. We are living with Car, with Uber, and these kind of things. Maybe with this question we go into some years after, and I want to ask you about how do you feel you will work when the security of a car will not only be the problem with an accident, the problem with a thievery, but even that someone hack your car. No? What happened with the protection of the data that your car is generated when you are in a connected car environment? How can you protect this new dimension of the car, of driving, that we will be more present day by day for us?
Imagine not only that they hack the car, but that they hack the car and they reach the manufacturer of the car, and they hack the manufacturer. So it's really a security issue. I think that we as insurers are still a bit far for insuring car data or communications between sensors, the car, the road, other cars, between the cars, as this for us is an unknown field, and we are insurance. So we insure what we know and the risk that we can manage, and we are not experts in data security. But if the industry reaches some standards of data protection and on data interchange, we for sure there will be for us there an opportunity, and for sure Mapfre, AXA, and Generali, and all the others will go there. There are already security standards for software development. There are already security standards for hardware for encryption. And you can go with your software, with your hardware, and pass these standards, and they give you a level of security on your development. And on this, we as insurance can trust, and we can insure. But if there is no regulation, there is not a standard, there is no international or European organism that is standardizing this, for us it would be a nightmare to start to insure these things.
Okay. So around this kind of topic, maybe the insurance industry needs somebody leading the adoption of standards, leading the definition of the world, and then you can act as insurance with this in this world generated. Okay.
I have a kind of a different point of view on this, and it's cybersecurity right now is a tremendous problem around the world, and is increasing at a really fast speed. Imagine a world in the not so distant future in which everything is connected, Internet of Things, self-driving cars, everything. Now almost everything is connected, but in a few years everything will be connected. And imagine, the dystopic world in which everything that is connected to the network can eventually, because this is true, can eventually be hacked. Because, as you know, and you are more technologist than I am, there's no 100% security in anything that is connected. 100% security is, by definition, it's impossible. If you want to hack anything, it's only a matter of effort, but you will do it. Mm-hmm. And this is the same in the future. Eventually, could also be the same. It could be a huge problem, not just for automotion, but for the whole, for the economy as a whole, right?
Yeah, domotics and this kind of thing that you say.
Everything. So we understand that for sure there needs to be some standards, because so far, all these connected devices are security of all those connected devices, the smart home or auto, security has always been a second thought. It's not been put in place by default because it was not part of the business model. It was expensive to create security for those devices, and the return on investment was not there. So as long as there's not some standards and some mandatory, institutions, perhaps in the European Union or at the federal level in the United States, that actually require the developers of everything that is connected, be it domotics or the connected auto, that actually require a level of standards of protection or detection of hacking in those devices. As long as this doesn't exist, is a huge risk that could eventually be diminished or identified if we create these standards. But even if we create the standards, even if we enhance the security of all devices, starting with cars, but with any other thing, the risk will remain to be there. The risk will not disappear. And that's when the role of the insurance company enters the stage. What do we do here? Can we protect you from a hacking? No, absolutely not. Just call Kaspersky Lab, for instance, in Russia, and they will tell you they cannot protect you. They can help you to minimize the impact, but they cannot fully protect you. What the insurance companies can do is be a partner with you in order to minimize those risks and in order to compensate you in case that eventuality, that risks of hacking or anything, an accident, a risk, is insured and then covered. And I understand the role of the insurance companies in this environment. So in terms of the auto, it's more or less the same. Of course, we need the standards. We need to increase, as the manufacturers, the software manufacturers need to increase the level of security on those devices according to some standards that should should need to be agreed and provided by multilateral institutions, but the risk will remain to be there, and we should accompany and help our clients protect in order to recover from the risk when it happens, in order to, like when you have an accident, it will be something like that. That's my point of view of cybersecurity here.
Okay.
But I think cyber risk is just one of the elements of risk that are being transferred from the owner of the car to the manufacturer or virtually the operator of a certain fleet. I happen to work with advising the European Union with the European insurers in the phenomenon of risk transfer. Risk transfer is something which is very new. The insurance industry has been insuring individuals that own a car and have certain responsibility because of the eventuality that they have an accident and they are responsible, liable for it. So that's how the motor insurance has been working until now. The point now is that with ADAS and cyber risk and other phenomena, that risk is being transferred from the individual to the person slash company or that is that designed the car and that is operating it. So the player that is responsible for managing that car. And that's a very, very complex reality. From a regulation standpoint, the European Union is taking a position that for the moment they are not going to change the regulation of motor insurance. So things are going to be like now. Even if you are driving a car and the car is self-driving, I would say, I mean, the ADAS are operating, so you are not looking at the road and so on, but you still are going to be responsible for what happens, not the manufacturer. What is going to change in 4, 5, 10 years' time? I think that situation is very unlikely to be maintained that way, because in many cases we're going to see how the car is going to drive itself, and the person is going to, from a cognitive standpoint, is going to be very far from what is going on at that moment. But it's very difficult to say at this moment what the insurance industry is going to do regarding to that phenomena. What I'm pretty sure is that we are not technology companies. We are companies that try to understand risk in order to prevent them or help the people when the event we are insuring happens. But we are not technology companies, so it's very difficult that we become a Kaspersky for the world of a car and so on. This is going to be led by manufacturers, by service providers, and the role of insurance companies is going to be to understand those risks in order to put a price to the premium and try to provide the incentives in order that everybody is doing the right thing in terms of prevention.
Yeah. Well, yeah, this is the idea that Esther has said. No? You have no, it's not your responsibility to define the world. The responsibility is about how to manage the risks. You know? Okay. Well, our audience is growing up during the session, so it will be interesting. Congratulations. But maybe some of you are thinking about why this board is named as driverless car. No? Well, okay. This is the question that I want to put on the table now. Well, we speak about how insurances will deal with shared collaborative mobility, how deal with cybersecurity, and maybe in a long-term future, or not long-term, but mid-term future, how you will deal with the driverless mobility. Because, our car policies are policies based on ownership. No, the car is something that you own, and maybe you are liable for any damage to third parties that your car will do. It's like in your home. No, if you put water on your neighborhood, you need to respond. No, but in the future, when you are a passenger of your own car, maybe you need a travel policy, kind of a travel policy for you as a driver or a driverless car. So how do we manage this? I think that Josep said now that there is a certain transferring of the risk. Maybe in the driverless mobility, there is a certain transference of liability, no? The liability from the driver to the software developer, car manufacturing, all this kind of thing. How do you prevent something like this?
I don't have an answer, an actual answer for that, but have you seen the movie Minority Report, the one by Tom Cruise? The guy is a cop, and when actually they have something which is able to predict that there's going to be a crime, and so well, doesn't have. It's a bad movie, honestly. But well, there's a moment in the movie that he is driving a driverless car. When he reaches a point where there's no road anymore, so he has to take the wheel and steer it.
Put the phone closer.
Yeah. So he has to take the wheel and steer it, because there's no road, so the autopilot doesn't work anymore. I think, well, it's a movie, but it's a good example of what we're going to see for a while. So we are going to see partially autonomous cars that are not able to do everything. And one of the things here is, from a cognitive standpoint, it's very difficult to maintain focus and attention when someone is doing something for you and you have to focus in one moment. Have you tried, for instance, to go to a car track, a car racing track? So the small cars and so on. Have you tried to steer a car after that? I mean, you tend to do the same things that you do with the car.
Yeah.
I mean, it's going to be interesting from a point of the preventing risk in that environment. And definitely, let's see, risk transfer for the manufacturer or the fleet that are operating the car. Definitely I see, but we're going to have to work a lot in terms of protection and prevention with the customer, because they are going to still have to steer the car for a lot of time.
Okay.
Oh, and there's another thing, is autonomous cars are going to be on the same roads with non-autonomous cars at the same time. And that's definitely very complex from an engineering standpoint.
I think, as Josep said, we are going to be in a mixed model, so with traditional and new type of cars. And for us, our products will be also mixed. We will have traditional products offering to our owners, car owners, with increased guarantees for this new culture, this new society that is going from ownership to travel or to mobility. And we will have new products, perhaps, for these new cars. But in AXA, we are not still in this. We are not yet in this new products. So for the moment, our products are quite traditional, with adding guarantees. New warranties for new needs.
I basically agree on everything that has been said so far. But just to mention that we envision that the transition period will be like, as I mentioned before, around 20-30 years. For those 20-30 years, the mixed models will be in place, and everything, will be, in a tumultuous way. But as long as Josep mentioned, as long as the risk is transferred to an asset, you need to, the insured party could eventually not become the person who is buying an insurance, but the institution that actually has developed or created or produced that asset that is taking the responsibility. As long as the automobile is self-driven, there's a software company that is behind the software who is responsible for it, for any malfunction or any eventual accident that happens. And that needs to be insured, for sure. And that's a corporate insurance. It's not a TPL traditional product. Now it's a commercial product that perhaps needs to be sold to corporates. Perhaps we need to deal with Daimler or with Tesla in order for them to have an insurance to cover their fleet that they are selling or renting or sharing with their customers. And that will be one part of the business that probably has nothing to do with what the current auto insurance business is all about. For sure, during the transition, and in this case, as in almost anything in life, there are no black and white. I mean, when TV appeared, someone said radio is going to disappear, and it's still there 150 years ago. And same happened with the video against the cinema. So same probably will happen with self-driving cars towards against driven cars, right? So as long as there's mixed models, there remains to be a scope for TPL and for the traditional insurance. But what we believe is that the size of the business will dramatically decrease during the course of the next 25 years, because even if you don't have fully autonomous vehicles, you have semi-autonomous vehicles, you have driving assistance systems that are currently right now on the streets and are diminishing the risks and the frequency, and then the loss ratio in terms of insurance, the loss ratio that we are experiencing. Right now, it's still a sweet moment for the insurance companies in the sense that we understand that the risks are coming down, but the premiums are still relatively, depending on which market, but the premiums are still relatively high. So together we are in a kind of a sweet spot in that sense. But as these new driving assistance measures and self-driving cars and all this stuff gets more common and more normal in the market, the level of risk that will significantly diminish, and this will drive down the premiums necessarily, because the pricing of the insurance products needs to be calculated according to the level of risk that you are covering. If the level of risk you're covering dramatically reduced, sooner or later you have to adapt to that. So this is basically what we are seeing here.
So they are the challenges that we have in this future of driverless mobility to face a world when not all the topics are defined yet. So maybe it's a world that is being created time by time. So and you need this kind of rules to apply or to manage of the risks of this world have. So you have to keep connected to the reality, connected to the evolution of the market to say, okay, we can go with our customers in this journey, in this behavior, following the customer behavior that you said. Okay, Ricard, maybe it's possible to. Okay, we have 5 minutes, I guess. So if some of you want to introduce any question, please use the phone and let us know. You got something to do?
Hi, good afternoon. Thank you very much for the panel. Just one question. You spoke about the change of the premiums according to having less risk in the future, more automated. But currently we are in a status in which we do not have many statistical data about how this will happen. So it's pretty difficult to make a model in which you can base yourselves. Or do you have any plans in this area, or how do you going to tackle this, or if you need some external help to define the models? Thank you.
Well, the historical basis for the self-driving car is still not there. You can argue whether Google could have some database on that, or Waymo, which is called now. But what we are actually building is a database of pay-how-you-drive cars. Basically, Generali, across Europe, I believe we are the #1 insurer in terms of telematics for auto. We have 1.3 million customers with a black box in the car throughout Europe, 1.3 million. And we've also recently, a year and a half ago, bought a startup in the UK called MyDrive, which is specialized in big data applied to telematics, in order to come up with models, pricing models, based on these huge historical data of driving patterns of the customers that we have around Europe at the moment. So we're working on that for sure. but this is still driver cars, not driverless. Driver cars with some levels of assistance to those driving. As long as we start insuring other types of cars with increasingly more aids or more, self-driving capabilities, we will be able to compare the patterns, the risk models of one models against the others, and come up with some pricing schemes that could eventually adapt properly to the level of risk that you are actually insuring, or you understand that you are insuring. This is from Generali's standpoint what the strategy going forward.
There are two different parts to the answer. No? One is about frequencies, and the other one is about severities. About frequencies, what we are doing is collecting all the relevant data that we have in the different markets, and obviously markets in the center of Europe, the United States, in some parts of Asia are more relevant for this. But you have already a lot of cars in the market with autonomous emergency braking. Not any manufacturer has an autonomous emergency braking system. You have tier 1 suppliers that are producing, so what you have is cars that have similar system. So in order to analyze what are the frequencies, the reduction in frequencies that autonomous emergency braking imply, you have to understand what model of car has what system, connect the dots, and see what you have. That's what we are trying to do. It's limited at the moment because the systems embedded in the cars at the moment are very new. Second part is regarding severities, and there's no other way of doing it but crashing cars. We have a research and development center in Avila here in Spain, and out of my budget, I have to say it because it's painful, they are crashing cars for me. So they try to see the impact on the repair cost of certain crashes. We are not looking at the security for the individual, because usually that's done by the manufacturer. So the crash test that the manufacturer does is about people not dying or people not getting seriously injured. We are crashing cars, obviously having that information, that is not, I'm not going to say that it's not relevant. We try to assess repair cost. It is not that we are not worried about people. Let me highlight that. Okay.
Esther, do you want to add something?
It's similar, it's a race, we are in a race and we must collect as much as data as we can to build these models, but for the moment it's true, we don't have the models.
Mm-hmm. Okay. So I think that, one question more? Yeah, maybe we have time for one question more if you have it.
If not, I can do the last question.
Yeah.
So, let me add two different things. One is, what about blockchain? And second one is, what about... so start with the first, because the second one is going to be hard.
I don't know if... Can you
yeah,
hear...
sorry. What about blockchain? Blockchain is the biggest, as you may know, is the biggest system, computational system that can't be hacked for now. And is the technology behind the blockchain and the bitcoins.
I think blockchain regarding insurance and automation is like traveling to Mars, possibly in terms of maturity. It's very, very far from our reality. Blockchain use cases relevant for insurance are very limited at this moment. I'm not saying that blockchain is useless. I'm not saying that it's not a game changer. It is definitely. But at the moment, use cases or the change in the way we do business is very, very far.
Absolutely agree. Perhaps, just to point out, perhaps in imagining what could happen in the future, basically blockchain is a general ledger, a public ledger, which actually gives you certainty without any institution in the middle of something. Property, ownership, exactly. Any contract that you may have. In terms of automotion and in terms of the sharing economy, it could have a place in the middle of the sharing economy in order to guarantee, who's doing what at what moment with what asset. But as Josep said, I mean, we see this as a part of the pipes or the infrastructure of a system, not so much a business. And I understand that it's not going to be transforming auto insurance in the short term for sure.
Okay, so I'm talking about. Oh, sorry, Esther. So.
No, nothing to say. I agree with my colleagues.
I said that because so the next question was that, and the last one was that there is a huge market. So you're dealing with a huge market, and it's becoming bigger. So I was checking in my phone that I personally have 10 insurance for me. So that's a lot, and I'm paying a lot of money for everything. So health, motorbike, cars, and everything, phone, etc. So there's a lot of startup companies working on this field. So how can you deal? Because most of the startup companies are using blockchain to disrupt this thing, not as the core base, of course, but they're using it to provide more to growth. Exactly. So what's your goal and what's going to be your relations with the startups?
Startups, we use startups to provide us with very interesting data. For example, we buy databases of the data. Okay. For example, we buy fintech, for example, geolocalization databases, anything. We are hungry for data.
A lot of the innovation in mature industry is going to happen in the startup ecosystem. That is for granted. That is for sure. Where you see innovation in insurtech at the moment, most of the cases it doesn't go to the core of the business.
Yeah.
And in other cases is disruptive of distribution models. But honestly, I don't think that they are going to be in motor. The name of the game is not going to be about disruption models coming from the startup industry. Yes, you have Uber, collaborative economy, so on. That's true. But manufacturers and established players, which already are not startups, are going to be the ones that are manage all this business. And the rest of startups are very, very relevant in terms of cooperation with established insurance providers. So it is for us to open our business systems so we can cooperate with them. In most of the cases, they are coming to us to show us relevant value propositions, enhancements for what we do today. And I think this is the way. I don't see many disruption to come in motor industry. I'm not talking about distribution. That is for sure, it's relevant. But in motor insurance, the models we have seen, like peer-to-peer insurance and so on, are not that relevant at the moment.
Don't really have a lot to add to what has been said. I agree that InsurTech, at least the view of InsurTech industry at the moment, is not really disrupting the insurance environment. It's more a collaborative kind of a startup. It comes. I recently been the part of the jury of the Insurance Award, the World Insurance Award that took place a couple of weeks ago in London. And I had the opportunity to analyze more than 100 candidates for the awards. Some of them, the innovation came from companies, and a lot of innovation came from startups. But the majority of them, as Josep said, are collaborative to certain parts of the industry value chain that are not being exploited at the moment. But their goal is not so far to disrupt us or to get us out of the market, but to complement us and eventually being sold to us is the dream, to be honest. And the majority of them come, or the majority of what I've seen in these 150 candidates that I've been reading through and analyzing, come from the distribution arena. And how can you leverage on data, on big data, on advanced analytics, on predictive analytics, on machine learning and artificial intelligence in order to better tailor insurance products to final users so that they are easier to be sold and consumed by final users, which is something that as established insurance players we are also working on, for sure. So it's a very interesting arena, perhaps not as disruptive as it happens with the banking value chain. I understand that in the banking value chain there are startups that are really disrupting at the current moment certain profitable parts of the business. This is not the same. So far, it's not the same in insurance.
Okay.
Well, if I can say a final word using your question, well, besides say thank you to you, thank you, everything. It's been my pleasure to work with you, and for me that using your reflection, the final message of these words will be that it's very important to be ambidextrous, as Marcos has said, because the world is changing, but will not be extended at the same time. No? So maybe the men of the 2020 will be the one species that will survive to their own extinction. So will be two worlds, one extincted and one newborn. And maybe this is the challenge. No? The challenge is to be ambidextrous in these two situations, with a world that is going to be extincted and with a newborn world that we will live in a very, very near future.
Okay, thank you so much. Iván, Josep, Marcos, and Esther, thank you so much for being here. It was an honor. Thank you.